Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go through the epic green on the charts as Bitcoin just continues to melt the faces of the perma bears who just refused to enter the market with us when we were calling the absolute pico bottom with those micro formations on the 4 hour and the hourly, which then bled into the daily and now into the weekly, and we are starting to get cues for a potential reversal in the market. Of course, this is a very sensitive market. The world economy is in disarray, and so nothing should be taken for granted. If you are making profit, Alpha Fam, please remember just take that profit aggressively. Okay, don't necessarily hold on to these coins too long in a macro downtrend, right? You don't need to be loyal to these coins. These coins aren't going to be loyal to you, right? So always be taking your profit, put food on your table. Again, guys, these coins have a tendency to be incredibly disloyal, and so you want to sell them every chance that you get. And hey, guys, a 20% gain is really nice, and you can always get back in if it has a 15 to 20% pullback. Now, sometimes the chart does just go vertical, but remember, there's always another asset to get into. So, not financial advice, but simply a motto that I use as a generalization to avoid being a bag holder should the market suddenly flip around and go uber bearish, right? Well, guys, we did get that CPI data. If you've been following me on Twitter or if you've been following me in the Discord, which there is a link in the description of the video below where you can join. It is free. And guys, we've just been talking about the CPI. The CPI did come in. It was a little bit as expected, we should say. Okay, Consumer Price Index as expected, CPI as expected, core CPI. CPI year over year as expected, core CPI year over year as expected. And then, of course, we did get a negative reading on the CPI excluding shelter, which does suggest that rent is a major factor in here. Guys, all of these readings are a bit lower than the previous reading, except for the core CPI, which could be problematic down the road, guys. So just pay attention to that. Also, jobless claims are down. They were expected to be up, so that's interesting. There's also the continuing jobless claims, which are also down. So maybe people are getting back to work. Real hourly wages are actually increasing. That will affect inflation. It will make it harder to fight inflation, but it's not an unreasonable amount. So it's still within that kind of 2%, 3% range that the Fed would like to target for inflation in general. So as long as real wages aren't just screaming up, probably this isn't going to have too much of a suppressive effect. And you can see that the markets did react positively to this. Now, because the markets, right, they had already expected these values. The middle column is the expected values. You can see that the stock market had a little bit of mixed results because they really already had built in the good news, and now they're taking a little bit of profit after the pumps that we've been having. And so there is a question whether we're going to get a major pullback after this last kind of run that we've been having, and then we perhaps continue up or sideways. And the other question is, do we have a breakout and maybe just start to skyrocket because people are seeing that maybe the end of inflation is in sight and the economy is still relatively robust, even if we may be in a technical recession because, of course, we did have an overheated economy from all of that infinitely printed money, all of that stimulus money, all of those 0% interest loans that every bank in the world was issuing to anyone that wanted a loan. And so everyone expanded their operations ridiculously, even when it was totally unneeded with totally weird projects that no one even wanted, like the metaverse from, Facebook. And I mean, who uses the metaverse in Facebook? Okay. Do you know anyone who uses the metaverse in Facebook? Why did they spend, like $10 billion on that? Because it was free money. Free money courtesy of the Federal Reserve. And of course, we're paying for that in the form of inflation. Facebook doesn't pay for that. You pay for that. Facebook got the loans based upon their stock valuations. Okay. We pay for it in the form of inflation. Guys, let's just move forward straight to the charts because, of course, I was letting you guys know that this is the result that I expected to be. I have been relatively bullish for the last couple weeks, indicating that it wasn't the time to be bearish, and I was giving a significant number of setups for potential bullishness should we have the opportunity to take advantage of that. And of course, many of you did. Some of you have been making just massive gains inside of the Alpha Commission Discord group. So again, the link is in the description of the video below. Please join if you want additional insights and even a little bit of a hand holding or personalized charts. I like to engage with the people in my group there. Now that I'm much more comfortable with my technical analysis, of course, the bear market has just been excellent for improving your skills, and I hope you guys have been taking advantage of that. There's no guarantee that it's over, there's no guarantee that this is the bottom of the market, but for now, we have made a higher low and a higher high. So we do have a bit of an uptrend here on the Bitcoin chart. Of course, this is November, right? The end of last year, and this is today. So we are looking at quite a bit amount of time to have been putting in a uptrend. And along with that, comes this bullishness and enthusiasm in the market, which really I've been preparing you for a while now, because I did identify a potential pattern, way back here, where I was saying this looks like it could end up being a falling wedge. And then, a couple months later, I did see that guys like Mitch Ray were validating my perspective on that. And while these, falling wedges, they do have a tendency to want to have 5 touching points, 1, 2, 3, all the way back to the bottom, 4, and then 5 before a breakout. It is possible for it just to have 3 touches, and we are breaking out here. But I would suggest just be very careful, Alpha Fam, because we could also have a fake out breakout, which then sends us back down, and then we have a fake out to the downside, and then we could have the 5 touches, and then break out of the wedge for real to the upside. Now, let's just pretend for a moment that this is a real breakout, because let's say that some macroeconomic things have changed. Inflation is being one. The recession isn't as bad as people expected yet, right? And maybe those are going to be issues for the end of 2023. Maybe those are going to be issues for the beginning of 2024. And maybe we're actually in a little bit of a sweet spot for a run right now. Well, what would be the measured move of this falling wedge? It would be one of these measurements here, and we could be conservative and take it from the middle. I like to take it just from the end here, and that would suggest that we could come all the way back up here and test this liquidity up here before maybe getting rejected. Why would we be rejected after getting that liquidity? Well, maybe the market needs to retest the bottom of the market just to be sure that that was the bottom of the market, in which case we could actually fall back down lower. This wouldn't happen in a day. It could take several months in order to get to this area. There could be a lot of wobbling before we get to that area, and there is no guarantee that we could get up there. We might just stop now, right? We might stop at 20,000. We might stop at 22,000. We might stop at 25,000. But if we did break out, of 25,000, there could be an epic run that could happen here, and we could even test some liquidity all the way up here at 30,000, 40,000, or 50,000. That is not a call that I'm making. I am not making a call. I am just saying that if we do break out on the weekly, okay, above these structures that we have going on here, that there is the possibility for an epic bull run should that happen. Now, why do I think that probably we're not going to break out above 25,000? It's because we do have this 200 EMA up here around 25,000, which would act as a bit of a blocker and just smack us back down potentially to retest the lows or to retest a higher low or even to make a lower low. These do tend to be very nasty EMAs to try to break. And then you also have the 200 SMA. So you have the 200 SMA and the 200 EMA working together, hey, along with the 50 EMA, and everybody and their mother who trades EMAs are going to be suggesting that this is a place to take profit. This is a place of potential heavy rejection, and so that could have a dampening effect on the market, which could bring us all the way back down to our lows. Now, what do we have in our favor here? Well, we do have, a squeeze play on the between the 9 and the 21 EMAs, which could pop us up all the way up to $20 to $22,000, and even above there, we could pop up to the 50, which is a common target for these type of 9/21 squeezes, and that again is that $25,000 area. So if we are looking at these higher time frames and we aren't being perma bears who just got wrecked as they were shorting the market, guys, we can actually have something potentially to look forward to. And what would that look like? That might look like something like we saw here, right, in the last cycle, where we had a mid-cycle rally. That's what I call it. This is the name that I've given to these things, which is you have your rally, you have your cycle, right? Your cycle top, and then you have your capitulation. You reach some type of a bottom area, and then you have a mid-cycle rally. Notice in the mid-cycle rally, you don't reach your previous all-time high. That's just how the money tends to work. Everyone left the market already. They're still feeling stung by the last losses that they had. And so there's not enough liquidity to come into the market to bring it to its previous all time high. But then what happens? You fail. People get disappointed. They freak out. They start having PTSD from the top that they experienced, which just utterly collapsed. And then, of course, we come back to retest the lows. A lot of people do believe that COVID was just an excuse for why the markets dropped this low. Markets often just use anything in the news as an excuse, but and it can accelerate or slow down the pace of something that happens. But in this case, the market probably just wanted to retest these lows anyway, okay? And it just would have done that one way or another, maybe a little bit higher, okay? Maybe it would have tested here, not necessarily right here. We don't know. And so probably this was a lot of panic underneath the 200 EMA here. But either way, you can see it sat pretty nicely above that line and then went on its merry way. No harm, no foul. And that's likely to be something that we get here, where maybe we have a mid-cycle rally. A lot of people are going to FOMO in late. We're all going to dump on their heads because, hey, you guys have been following along with me, so you're pretty well taken care of. The alpha fam is just absolutely gonna kill it. We're going to take our profit every time we bump our head on some resistance, okay? And then we're going to get back in on a pullback, and we're just going to ride this puppy up until we take our last piece of, profit. When we see that we're breaking underneath the weekly 9 EMA, we're just going to get out of the market, and then this sucker may come back and retest its lows on us. And once it retests its lows, maybe that's going to be the end of 2023. Maybe that's going to be fall 2023. Maybe it's going to be the beginning of 2024. Nobody knows how long this is going to go or how high it's going to go or what all of this is going to do. It could be a very muted thing, and maybe it just kills over and dies very quickly. But either way, because you have me here, you can see the different levels that I'm suggesting. Why don't you take your profit at this $19,000 level, like I suggested, in the group and elsewhere during the live streams? you can see that we did bump our head here. That would have been a great time to take profit. Yeah, if we get on top of it, yeah, maybe enter. If we have a significant pullback to down here, and then maybe we re-enter, right? But we took our profit and we paid ourselves, guys, and then we can go along for the next push up to maybe 22,000, right? 21, $22,000, and then maybe the next at 25,000. Either, whatever happens, we're going to take a little bit of profit and put a little bit in our bank accounts. And guys, we bought in at the absolute pico bottom here, okay? We also bought in at this bottom right here, a little bit more nervously, but very confidently over here. And so we are just sitting pretty. You guys probably took some profit here, probably, took some profit along the way here. But, if you haven't taken any profit yet, I do suggest take a little bit of profit. Yes, this thing can pump, but you guys are going to be really happy that you took a little bit of profit if this thing just ends up dumping over the side of a cliff, which, by the way, every time it reaches up for this yellow line, it has dumped over the side of a cliff. That is possible to happen, but we're not going to be perma bears. We're going to try to look for the positive outcome, and if we do have a pullback, I'm hoping that we do stop somewhere around 18,500-ish, or maybe as low as 18,000-ish, right? Somewhere in that neighborhood, and maybe we can just continue this trend of higher lows. Or maybe we just blow through this thing. Who knows, okay? Sometimes that can happen when you do have a short squeeze because everyone's shorting, and the market is actually orienting itself in a bullish way, which is what I'm telling you it's doing, guys. Okay. We also have to be aware that the stock market is preparing for a potential decision time. And if we take a look at this, you can see that. We did push above our downtrend here. Sorry for the mess, guys, but just got a lot going on. But we also have this inverted head and shoulders, right? We have this inverted head and shoulders over here, which can potentially bring us as high as 4,600 on the S&P futures ES1 chart, or we can just be at the trend line right here, where we do get just rejected and retest our lows, maybe at 3,700, maybe at 3,600. Either way, we could be coming back down, and hopefully we don't make a too far of a drop. We don't want to violate this $3,500 area or make a lower low, because that would suggest probably epic continuation to the downside. We'd really like to maintain this channel in the S&P 500 that maybe could offer some support, maybe make a double top on the S&P 500 before later in the year retesting the lows, just like perhaps Bitcoin would do, some type of mid-cycle rally, and then, just get into a position where, down the road we can have our real bull run, right? Once the recession and once inflation cool off a bit and everything resets and the Fed has a little bit more ammo in their pocket to do the money printing again down the road, and then we're going to have tons of liquidity in order to provide for just an incredible bull market. Of course, we hope that comes sooner than later. We don't want to have too much regulation or too many, strange things happen in the market if too much time goes by. But we'll take whatever we can get, because things have been so bearish for so long. Let's go ahead and just flip back to Bitcoin really quick, because I do want to make this a Bitcoin episode, and you can see that these rising wedges on Bitcoin, they do tend to break both ways. And what do I mean by that? Well, let's go into the past here, where we did have our blow off top, but we did form kind of a falling wedge right here. And if I do put it on log scale, okay, this is a little bit of a trick that I figured out. We do see the measured move here, just of the wedge itself. We did end up reaching a price level, which was at the top of that measured move to the upside. But hey, look at this. We also at some point reached a price level that was at the bottom of the measured move to the downside, okay? And while these have a 70% chance of breaking to the upside, this one broke to the downside, okay? This one, by contrast, broke to the upside, but look, we also hit the measured move to the downside. What does this suggest? I don't know, that Bitcoin maybe has some type of a Darth Maul side to it, right? Part of the Sith army over here. And guys, if we do follow that same type of algorithmic pattern, then if we are breaking out to the upside, maybe hit that 25,000, don't be surprised if at the end of the year, or if next year, or if just sometime in this year, we do end up pulling all the way back to perhaps that 10,000, maybe even $8,000 area, which would be the measured move to the downside. Guys, I'm not trying to like yank your chain. I'm not trying to be a perma bear. I'm talking about going up, not down. But guys, you have to understand how this asset moves, how it shakes people out to the downside, how it shakes people out to the upside, and this type of whiplash action just liquidates everybody. It scares the bejesus out of everybody, and then the billionaires and the exchanges and the institutions and the politicians, they all get in at the bottom and they scoop it up and ride it along the way. So let's think about this in terms of retail. If retail got in here, right, then the smart money got in down here, and the smart money always had an advantage over you. If you're getting in right now, yes, we're going to have a nice ride, but if you don't sell, you're going to be bag holding, assuming that the market tests the lows again or even makes a lower low, and then the smart money is going to scoop that all up, and they're going to have the advantage over you again, which means that they can just dump whenever they want and scoop up all of your assets and then dump at the top of the market because they are always going to be in an advantageous position. And this is how I'm looking at the market from kind of a smart money perspective, where I'm trying to crack the code of what they are doing. Now, what do I have, marked out here? Well, these are little peaks on the way up in the market, and this does seem to correspond to something that I found on the ADX. Of course, the ADX is an indicator which does measure some type of I would say perhaps the robustness of the enthusiasm of the mood in the move itself in either direction. It's not necessarily telling you the direction, but it does suggest that, this is the amount of oomph behind it, right? And so if we just go ahead and pull up the ADX, we can see that, let me just try to grab this one here. Yeah, we can see that on the daily, there's a lot of just fiery chop here, right? But what I'm looking for is, when does this pink line touch basically the 99% level, okay? And when we get around that 99% level, it's only been a very few amount of times. Yes, we've had a couple other ones that come very close, but really I'm looking for just breaching that area, and especially with the RSI as well reaching up as we're doing right here. You can see the RSI touching this level, and we don't really see that too often, except in this case, this case, this case, this case. And where else is the yellow line hitting it? Right here, right here, right here, almost right here. But we are having this yellow line on this ADX hitting right now in this area. And so let's just examine these areas where it does hit. And yes, it does seem to come right before a major pullback, right? Like, things seem to crash after these blue lines. But if we zoom in and just take a little closer look, you can see that we actually have a huge run up for several days, okay, before we have that pullback. And where we pull back to is only really where the ADX originally fired off. So this is actually a very clean signal to potentially enter the market. Look, the signal fires off. We have multiple days of bullishness, and then we crash, right? Basically to our entry. Same thing here. Multiple days of up, crash down here. Not a big run, but hey, that thing was a pretty cool little signal. And this one pumped all the way up to here, and then it crashed a little bit below it. But hey, this was the actual turnaround in the market, so you can't really knock it for that. This actual wick right here actually just hit relatively the same area. Now, one thing that you'll notice is the ADX doesn't fire off during this downtrend or this side trend. It only fires off during this uptrend. And so that makes this a potentially very powerful tool to suggesting that maybe we're on one of these little pumps that are about to happen, and maybe we're on the first one on our way up, which could be something like this, just a huge pump, just a huge pump, just a huge, well, this one wasn't a huge pump. This one was actually the very top of the market. So here's our outlier. Nothing is perfect, okay? Yes, we could be tricked by this, and that's why you have to take your profit. That's why you have to have your stop losses. That's why you have to mind your account. But in almost every other case, we do have a nice leg up and then a pullback that just brings us back to our entry. And so, guys, I am going to consider that a bullish signal for me as well, where potentially we could have several days pumping us up, maybe even to that 25K area, or just to be modest, maybe 20K, right? And then maybe we have a pullback, something like retesting the breakout of this wedge, which might look something, if it's one of those just really humble ones, it could just be a breakout and then we just retest and then maybe we go, right? Or if it's not a humble one, then it could be something like this and then just an epic crash, right? Before we go, or perhaps even a fake out lower and then we go. Okay, so we don't really know what the future holds. I'm not psychic, you're not psychic, no one can know that stuff, but we are trying to do our best to get some good analysis here. And so this is a macro episode, because I am talking about how all of this plays with the CPI data. And to bring it back home to there, we have to understand that on February 1st, the Federal Reserve will be making a decision on the next interest rate increases. And if the interest rate increase is, 25 basis points, then the market is going to be very satisfied, and probably we can have continuation, maybe sideways or even up potentially. But if the Fed increases interest rates by 50 basis points, 75% of the market will be shocked, okay? 75% of the market is expecting 25 basis points. If the Federal Reserve says that the core inflation is still too hot, right? If the core inflation is still too hot, it's higher than last time, right? Then what they're going to say is that maybe we need to do 50 basis points one last time. And what could that do to the market? It could cause the market to just crash down. And what is the market doing right now? Well, if we go over to the S&P 500, again, like it's just sitting at that trend line. I'm on log sale. There we go. On the regulars, it's just sitting right there at that trend line, waiting for something to pull it back or break through. And if the bulls don't step in and have this thing break out bullishly, we need to cross like 4,100 on this S&P futures, the ES1. Then what's going to happen is probably we're going to languish. Sellers will step in to take their profit, and we may just retest some lows. Maybe this diagonal right here around 3,800, or maybe, as I said, some of these levels like 3,600 or 3,500, and hopefully not lower than that. Okay, guys. And so there are some potential hazards still in the market, but we also have these potential bullish patterns reading where if we do get over certain thresholds, we could have just an epic run, okay, a mid-cycle rally, and that's what I'm hoping for, but it's not confirmed yet. So get your positions ready, get your stop losses ready, take profit. If you haven't taken some profit yet, put some money in your pocket, pay yourself for the trading that you've been doing. Always be taking your profit, always be selling. Don't be loyal to these coins. These coins will not be loyal to you. Put food on your table, guys. All right. Anyway, guys, that's your alpha for the day. Stay safe and happy trading.